Hello friends, welcome to my channel and thanks for watching this video. Friends, we have one more debilitating week in the Wall Street, and no, I'm not talking about the last week or the week that has just passed by. I'm talking about the last couple of weeks, and we can see how the price behaved, how the indices behaved in the last 2 or 3 weeks. I mean, individual stocks will tell you a different story, but on the index basis, obviously we are not going anywhere. Instead of these big moves of 500, 600 or 700 points on Dow Jones, or 200-300 points in NASDAQ up and down. But at the end of the day, if you are looking at the overall price action, you will get to know what's actually happened. So let's start analyzing what has happened in the market and what will probably happen in the upcoming week. So the first news is a cocktail of sticky inflation and a tight labor market boost Bank of England rate hike bets. So, expectation is a different thing, and right now it is completely different with the reality, because the data we have till date is not indicating a very good picture. And after the data release, you will see that most of the central banks are not in a mood to go down, and most specifically I'm talking about Fed. I mean, for the rest of the economies, they may have get their terminal rate, but not for US market. So there is more to go. If we have the unemployment rate, which is at lowest in the last 50 years, so you can't ask for more. A good economy which will definitely push Fed members to increase the rate, or to push the rate further on the upside. We will talk about Bitcoin, we will talk about the chart. Apart from that, uh, so there has been a very bad news, and some of the banks are posting very bad numbers. So I don't know what is the context of Standard Chartered absolutely not for sale. Okay, apart from that, let's see what else do we have here, which makes sense. I'm not going to talk about the tech news or political geopolitical news. So apart from that, let's see what do we have here. I think this is not at all, this does not make any sense. Treasury yields fall as investor await key wholesale inflation data. Okay, so this is one of the data point which the market participant must look for when we are going for the next week. So this is one of the important data point. It will definitely have an impact on that particular day. So keep your eye on this particular data. Apart from that, yeah, this is most of it. So let us now go to the important chart analysis section. So if you are looking at Dow Jones, it is up by 129 point. Looking at NASDAQ, minus 68. Looking at S&P 500, minus 11 points. Gold, 1850. Oil is down. I mean, it was 80, 84. Now it is 76. So it is down. US yield again started rising. If you are looking at a 10-year yield, so it went down to 3.4, 3.5. Now it is trading at 3.8. So it jumped higher. Apart from that, let us see what else do we have here. Yeah, so you can clearly see, I mean, this is staggering. The US 6-month yield and US 1-year yield, it rises up to 5%, and it is way beyond than the 2-year, 10-year, and 30-year yield. So this is still indicating that the bond market still indicating that in the next 6 months to 1 year there are lots of uncertainties. There are indeed lots of uncertainties, which simply means that it will have a direct impact on the stock market. And if you are thinking that I mean, this is a period of consolidation and after that the stock market will move higher, so you need to hold your horses for the least of 6 months to the max of a year. So we need to see what will happen in the next 6 months to 1 year before we take further action, because I mean, this is quite surprising. The mood has simply changed in the last 1 week. So even I am very surprised, because I do watch this data on weekly basis. I'm not going to, not looking at this data on daily basis. So while making the videos, while I'm interacting with you, I'm just seeing this data, and this is quite surprising, and this is not at all good. This is not at all good. So let's check out the bond yield chart as well. And now the US index, US dollar index. Now dollar index went up, and it has already tested 104.5. So above 104.5, or in this band 103, 104. Once it started sustaining above 104, the trend will change again. So this is a very big risk. This is indeed a very big risk. We will explain dollar index as well. So let's start looking at the yield curve chart, and let us see what the hell is happening over there, because I mean, this is not at all a good thing. Even I am very surprised. Okay, I think the chart is not updated yet. It should be. So the 5 year, the 3 month, yeah, it is not updated yet properly, but the 3 month, and this should get updated. This is like 5%. So this is not giving you a very good picture. This is literally not giving you a very good picture, because the bond yield curve is actually showing you a recession, and I still have that feeling. I still have the same stance that recession will be on the cards, even though people are saying something else, or even market veterans. As I don't bother about them, because I don't know what they are talking about, because the data is saying something else. It's been there on the cards that uncertainty will be there, and bond market is indicating that. And something or the other will definitely happen, because if we get hot numbers on economic fronts, and US central bank keeps on rising interest rates, so somewhere down the line you will see clash, and that clash will bring back the economy down. So that's the ultimate goal. And when you need to push down the inflation, obviously you need to push the economic activity, or at the end of the day, economy as well. So I am not in that camp that recession is not going to happen, because interest rate, or the terminal rate, is yet to be seen, at least in the US market. So be very much aware about the move. Now the next chart that we are going to analyze will be dollar index, because this is one of those charts which I have been regularly visiting, and I have been looking at it with sheer focus. So the two very important levels that I am focusing on are 103 and 103.87. If dollar index sustains above both these levels, you will see a move towards 115, 120 again. This is the risk. This is literally the risk we have right now, because this is again a breakout which has happened, and if it does not fall down, or if it continues to trade above 103, 104, then obviously we will move towards the previous high of 1999 or 2000, which is in between 120 and 122. So this is the ultimate risk. So please be aware about the move, and this is not going to happen overnight. This may take couple of months, couple of weeks to couple of months, maybe 3 months, maybe 6 months. But at the end of the day, what you need to remember is whether dollar index is sustaining above 104 or not. And if it does not go below 104, the next target will be 120, because dollar index is yet to test the upper end of the range. It has not tested the upper end of the range, and it will definitely test. So if it does not go down, it will move higher, as simple as that. Apart from that, let's go and check out the Dow Jones. And Yeah, before that, I think it's better to talk about Bitcoin, because Bitcoin lately is showing some sort of positive moves. Okay, and you can see I have been working on this chart. So there is indeed a range breakout that has happened. A range breakout in Bitcoin happened above 21,500. So I mean, with a stop loss of this is completely based on trading. There is nothing else to be talked about. So why it is going up and why it is going down, rather than that, I just focus on the trend. You can see above 21,500 it is a breakout, and the next target that we are going to look at will be 48,000, 48,500. So this is something which we are going to look at as far as Bitcoin is concerned, and most importantly, if it continues to sustain about 21,500, which is your stop loss as well. Yeah. Now let's go and check the Dow Jones, and if you are looking at the price chart of Dow Jones, if you are focusing on daily chart, you will see something else, but I would rather focusing on weekly chart. Okay, and if you are looking at weekly chart, just look at the trend. Okay, just look at the indicators rather. It is not at all looking very, very positive. Let me tell you, this is very clear and very frank. This is not at all giving you very, very positive signal. And for the last 3 or 4 months, there is no such price action that will give you a confidence. Okay, because since November or December 2022, uh, this is the range. So Dow Jones is not going anywhere. So on the upside we have 34,585, and on the downside we have 32,600. So this 3,000 point or 2,000 point range, 2,000 point, 2,500 point range. Let me check it. Yeah, nearly 2,000 point range. So a consolidation is going on. You just hope that this will be a consolidation. If there is a range breakdown, then it would be a big problem for the market. So just hope for the best. I mean, for the last 2.5 months, it's been a consolidation, and I would think that this is good. A time correction is rather good than a price correction. Otherwise, the trend will get disturbed. And when index started falling down, it will crack the trend, not only for the index itself, but for the overall market, the individual stocks. So that would be a completely messy scenario. So one must not go into that. Yeah, talking about the NASDAQ, I mean, I haven't changed my view on NASDAQ even if it moves 10-15%, because if I may check here we are, if I may check the indicators in the weekly chart, it is telling you a different story. It is literally telling you a different story, because there is a base formation that's been going on. That's fine, and that's I agree with. But looking at the price action, at least I want further confirmation to talk about whatever I have in front of us. that is that is the max. Okay, I'm not going to talk beyond that. So right now, if you are looking at NASDAQ, I would rather look at this consolidation that is happening. So if NASDAQ sails through, then obviously we have further upside. But for that, number one, NASDAQ must not go below 11,600, and we require breakout above 12,000. So once NASDAQ taken out 12,000, and most importantly 12,300, we will be on the uptrend again. Okay, and then the most stable one, which is S&P 500, and S&P 500 is also saying you the same thing. Let's check the indicators over here, and here we are, the overbought indicators. So the overbought indicators are not giving a, if you just focus on what is happening today, what is happening after 2 hours, you may not able to see the overall picture. And that's why you need to calm down and let the price behave the way it is, because then you will get to know what actually is happening. Because at the end of the day, the price trend or the pattern is not at all giving you a very bright signal. So right now you have 4000 on the downside, which is a support and stop loss, and 4137 or 4140 on the upside for S&P 500, which is going to be a target and resistance. So let it makes its move, let S&P 500 make its move beyond the range, either on the upside or on the downside, then we will take our decisions accordingly. So out of these three indices, NASDAQ is actually better poised, but then at the end of the day we will see how NASDAQ behave over a period of time, because whenever hawkish Fed signal came, NASDAQ started falling down. So there is some sort of threat, there is some sort of jittery feeling that we have, that we can clearly see in the market. Okay, I think one most important chart is the US 10 years yield, and yeah, it went up to 3.9 actually. So as you can see, it is not falling, it is a base formation that is happening. Okay, so that is not at all good. It is very hawkish for the yield chart, but it is not at all good for the market, because if the bond yield is consolidating and it is not falling or going down lower, so I mean a rising bond yield is always bad for the stock market. Okay, either if the stock market does not fall down, it will not go up. So both the scenarios will be there. So right now if you are looking at the price action, so if the 10-year yield is not going below or is not trading below 3.5, a potential move towards or in between 5.3 and 5.9 is still on the card, but then we will see at the end of the day what will happen. And if you are looking at the hourly chart, let me give you this version as well. And I have seen in most of the cases, I'm talking about chart analysis, this technique will definitely, in 9 out of 10 times works out. This is very important to understand, because if I may draw a line like this, you can clearly see a range breakout. This is a range breakout that has happened, and if US 10-year yield is trading above 3.7 or more, then definitely it will move towards 4 and 4.3, okay, in the short term. So this is not at all a good sign to be looked at. Apart from that, do I have anything else to look at? Yes, one more chart, that is WTI crude, because it has actually fallen down. Now understand this, I mean, it is good that the crude oil started falling down, but there is another reason for that. Okay, it's not about how geopolitical scenario plays out, but it also indicate, reduction in the price of crude oil also indicate demand destruction. That demand is not there in the market, so that is another way to look at it. Anyways, that's good for the importing countries. Okay, and most of the population are residing in the importing countries and not on the exporting countries. So I mean, if crude WTI futures trading below 79, 93 or 80, it will definitely moves toward or in between 48 and 53. This is going to be the next big support. Yes, we have an intermediate support or very important level to look at, which is 70, and if WTI crude futures started falling below 70, then a range that will open up, or a big fall that will open up, which will be in between 48 and 53. So this is good. This is good for the importing countries, and most specifically for the companies who use crude as their raw material. And 90% of the companies, those who are related to, I'm not talking about technology services company, but all the products, all the goods, somewhere down the line they are using some part of crude in one form or the another. So it's a huge industry, and obviously they will get benefited out of it. So at the end of the day, there are some very mixed signal. There are some scary signals. I would say the bond market is not giving you any indication that stock market is going to be in a move a rally, or you will end up with a FOMO. That's not at all a signal that at least I am getting from the market. And I'll wait for the Fed, what they are saying and what they are doing. Rather forget about what they are saying, because what they are saying scenario is like a trading gain or trading loss for that particular trading session, but what they are doing will definitely impact the market in the days and in the weeks to come. So that's something we need to look at, and be very specific with your trends or with your trades, and do not overstretch yourself. Don't be over pessimistic and don't be over optimistic. That's the motto, that's the mantra that we have right now in front of us. So I hope that you are not going to take any unnecessary risk unless you are very sure what you are doing. So this is the end of the video. Thanks for watching.